Hello traders and welcome to yet another episode. And in this episode, we are going basically to look at how to compound $100 or how to trade with a $100 account. The big question that we always receive or that I always receive is which is the best amount of capital for you to be able to start trading. And one of the key things, or my response basically is that any amount is suitable for you to begin trading. Of course, if you're a beginner, once you are done with your mentorship, you need to begin small. And beginning small is relative because we are all able differently. So there is someone who maybe probably $1,000 is the smallest amount. And there is someone else who probably maybe $10 is the small amount, $20 respectively. But in this video, basically, I want to show you this is mostly for the intermediate traders and maybe the advanced traders, how you can be able to begin with a $100 account and you compound it with time. So the key thing that you need to understand is that why are you starting with $100? So this is low risk entry into the Forex market. You learn by doing with real money. You develop risk management skills and build the discipline and strategy gradually. So when you talk about learn by real money, you understand that if you are trading in your demo account, you're not it's not going to teach you the strategy, it's not going to teach you the psychology. It's basically for helping you to fine-tune the strategy. So once you go to the live account, then you start now understanding your emotions, and it will be very unprofessional or very unwise for you to learn your emotions when you are risking high amount of capital, which in case you lose, it might affect you even more psychologically. So the reason why we are talking about beginning by $100, and this will help you develop your risk management skills even as you fine-tune your psychology. Then it will also help you to build discipline and strategy gradually, because if you're compounding $100 and maybe probably, let's say maybe you want to compound to $1 million or maybe $10K dollars. So it begins by you being disciplined, because it will take you time. Remember, this is not a jackpot. This is not a bet that you're going to place and win a jackpot instant and make 10K instant, right? So it will take you time, right? It will take you some time. So the first step, learning the basics, all right? So understand the currency pairs. So for you to be able to trade this $100 account, you need to understand the currency pairs that you're going to trade. Maybe, for instance, you're going to trade the major currency pairs, that is Euro USD, GBP USD, USD JPY, etc, etc. Then learn about the pips, the lots, the leverage, and margin, all right? So you need to understand this concept even for you to be able to trade this account, because if, for instance, you're going to target 75 pips, so you should be in a point to be able to calculate pips and know 75 pips have been attained, okay? So then it's important to study trading sessions and how the market moves. So that is very, very basic for you, because you need to know which, if you're trading major currency pairs, you need to know, for instance, if you're trading Euro USD, you need to know which session, which trading sessions that Euro USD is active, so that you can be actively looking for trades during that session, meaning there is a lot of volatility. And mark you all these, the pips, the leverage, the margin, the trading session, how the market moves. I have done videos in my YouTube. You can be able check the previous videos, especially the Forex beginners playlist, whereby you have all that given for you freely. So step number 2, once you have understood some basics in terms of trading, the step number 2 is to choose a trusted broker. So look for a regulated broker. For instance, in this case, I'm going to use Scope Markets Kenya, because that's the broker I use. It's regulated by CMA here in our jurisdiction, that is in Kenya. Then ensure low spreads and minimum deposit. So this broker, Scope Markets Kenya, allows you to have, it has low spreads, especially if you're trading the gold platinum, which has spreads as low as 0.000. We also have they have a minimum deposit. You can deposit as low as $10, $20, and you begin trading. Then it's important for you to familiarize. If you're going to trade, the broker that you're going to trade with, it's important for you to test their platform via demonstration account, or what I'm calling a demo account. Remember, demo accounts and live accounts, they are the same. The only difference is that the demo account is virtual money, but the live account is whereby you're going to deposit the cash and start trading by yourself. So step number 3, open and fund your account. So you need to open a live account once you're done with the demo account. So open a live account, fill in your details, and verify your identity. So you can verify using your ID, personal verification or personal identity. Then you can use KRA PIN or bank statement, basically to verify residential details. All right. Then use secure payment methods to deposit. So with Scope Market, you can be able to use bank transfer or wire transfer. You can be able to use M-Pesa. You can be able to use Skrill. And M-Pesa becomes very convenient, especially here in Kenya. And then deposit exactly $100 to stick to the challenge, because this is a challenge that you're giving yourself. This challenge will help you understand whether you have understood the concept. It will help you build the discipline. It will help you be consistency. It will also help you fine tune your strategy. So you need to have exactly $100 in your account. Then step number 4, of course, it's first of all, I always advise, even if you have some live money you've just deposited, just begin by demonstrating by a demo account or a demo account, so that you can gain the momentum, right? So once you do like 3, 4, 5 trades in your demonstration account, that means you're practicing your strategy without risk. Then what this does, it helps you to boost your confidence or to boost your morale, such that even when you're transition to the live account, at least you have some level of confidence. And this is what I'm talking about, simulating trading conditions. All right. So then focus on consistency over profits. Focus on consistency over profits. So for you to succeed in Forex trading, don't really put a lot of emphasis on profits, because if you put a lot of emphasis on profit, it means that anytime you're going to make losses, or if you don't make those profits, then what will happen at the back of your mind, you'll be affected psychologically, and you'll maybe probably tend to think like this Forex trading doesn't really work. So the reason why you need to focus on consistency over profits. And one way to do this, basically for you not to look so much on profits, is to look at a scenario whereby you are growing your account, maybe probably on a percentage basis rather than on the dollar basis. Okay. So then step number 5, choose a very simple strategy. And once you choose that strategy, focus on that particular strategy. For instance, myself, I use ICT order blocks. So you need to define your entry and exit routes for your strategy. And then you need to use stop loss and take profit orders. Stop loss orders to give you a cushion in terms of minimizing your risk or managing your risk, and take profit orders basically to help you be able now to look at maybe probably risk to reward ratio. Okay. So this is just a simplified version of the ICT order block strategy that I use. This strategy is developed by Michael Anderson, the author of ICT. So with this strategy, basically what we look at, we want to understand the market structure. So we look at, probably when we have this kind of a scenario, we have a BOS around this particular point. You can see here we have a BOS. So then once the BOS is created, you have to look back and see where the market was coming from before creating this BOS or break of structure. And then you're able to mark the last buy candle. If it's a bearish momentum, so we are looking at the bearish order block, and therefore we are able to mark the last buy candle before the price pushes on the downside. In case that candle is doji, then we need to mark the next buy candle, maybe probably two of them, right? So then we need to wait for the price to come back to the area that we have marked the bearish order block. And with ICT, we usually put it with in terms of time and price theory. So we want to see the price retrace back to this bearish order block, and it should be within a kill zone. We have the London kill zone, we have the New York kill zone, we have the Asian kill zone, and also we have the London close kill zone. So I have already done a video on kill zones, but I'm going to do even a more precise one on kill zones. But as you can see, the price came to this particular level during the New York kill zone, therefore making it even a more high probability setup. And it is recommended you take a sell there. You have your stop loss slightly above the order block, and then probably you target the sell side liquidity. So you can see the liquidities level here. That's where we had our take profit. And as you can see, that's quite a successful trade. So it's just a simple strategy without much things, but what you need to know is what really makes a high probability order block. Number one, there has to be a BOS, or maybe a shift in market structure, or maybe a change of character. Then we want to see the impulsive move of price from that particular level. As you can see here, we have that impulsive move of price at that particular level. Then we want to see the price retrace back to the zone that we have marked. And as you can see, the price upend. And then the fifth, the other condition that is very important is the time when the price is coming back to this level. So it has to be within a kill zone. So if it's outside of the 4 kill zones that I talked about and mentioned, then you don't need to take the trade. But it's if within the kill zone, then that makes the trade quite high probability. So step number 6 is to manage your risk, and you should only risk 1 to 2% per trade. So if you have $100 account, that means that if you're risking 2%, you need to risk $2. So every trade you're going to take, you need to risk where you're putting your stop loss needs to be $2, and that tells you definitely you need to use 0.01. So if you're using 0.02, 0.03 in a $100 account, then what you're doing is over leveraging, and therefore all over risking, and you need to avoid that. So the other thing that you need to avoid is over trading. So over trading is whereby you find yourself maybe taking so many trades within a day. So, or maybe probably you find yourself even revenge trading. When you take losses, you want to revenge trade, and that will lead you to over trading, then meaning that you are going to probably make more losses, because the more you trade, honestly, the higher the chances of you making losses. So then you need to track all your trades in a journal. Ensure that you journal all your trades. Remember, the journal is very important because it's going to help you in terms of reviewing your trades, so that you can be able to identify your mistakes, you can be able to identify your weak points, and be in a point to improve them, and also identify your strong points so that you can be able to capitalize on that. So to add on the risk perspective, ensure that any trade you take is at least giving you a risk to reward of 1:2 and above. All right. So then it's important to be cautious, or to move on cautiously. Like I said, when you're starting, make sure you start with the smallest lot size, 0.01. So I recommend for $100 to $199, use 0.01, and that is when you're taking one trade at a time. And in a week, we are looking at maybe probably making 75 pips in a week. And that means we are looking at growing maybe account with 10%, which is possible. I'm going to show you that. So then you need to stay disciplined and emotion free. All right, you need to stay disciplined and emotion free when you're trading. And the key thing again is to be able to review your results weekly. Remember, here we are trying to compound the results weekly. So final tips for being success. It's to be patient and realistic. So targeting 75 pips in a week is quite realistic. Focus on the process and not the profits. So the process is for you to reach maybe 10K, 100K, depending on the target that you're going to give yourself. Then you need to be consistent. You need to show up. Right? Though, even though we are talking about being consistent means, it doesn't mean executing trades, but it means being in the chart, analyzing the market, being in sync with the market, etc., etc. Then remember, you don't have to trade every day. This is very important. Focus on 2 to 3 quality setup per week. With the simple ICT strategy of the order blocks that I've shown you, you can be able to get 2 to 3 quality setup per week, focusing just only on one pair. Okay, so let me now show you the trading plan, or maybe probably the trading guide that will guide you in terms of tracking your challenge. So as you can see, this is TFTL Forex Trading Challenge. And in this kind of a challenge, basically what we are looking at is for us being in a position whereby we can be able to trade $100. So this is the opening balance. Remember, we are growing 10% weekly. That means about 2% daily. But remember, you don't have to trade every day. So that means for the first week that you trade, you're targeting $10, right? So, and you're risking $2. So that's about weekly risk to reward ratio is maybe probably you're talking about 1:5. And then you're targeting 75 pips. And that means you are risking about 20 pips, right? So this should be 20 pips all through. That's what we are risking, so that we can be within the 2% mark, right? So remember, you need to use 0.01, right? You're talking about using a 0.01. So when we talk about using 0.01, so it means day one, in case you get the first setup, you are using 0.01, risking 20 pips, and then probably you are targeting to make 40 pips, right? So that is setup one. Okay, setup number one. So setup number two, remember this is the risk, and this is the reward, right? This is the reward. So setup number two, you can also look at maybe probably 20 pips using 0.01. So here you are looking at maybe probably another 40 pips, right? So you're looking at another 40 pips. So in terms of dollar value, remember this is probably here you'll make $4, and then here you make $4. Then you can get another trade, you're risking 20 pips, targeting 40 pips. So, and you find that maybe probably that's another $4. So those are three quality setup. And if you look at it in terms of risk reward ratio, so I mean in terms of number of pips, so the minimum we are talking about is 75 pips. And the maximum, so anywhere between 75 to 100 pips in a week becomes realistic and will help you quite achieve your target. In terms of dollar value, you can see we'll be talking about $12 in a week. So, and this setup you're looking at is a setup. And remember, again, when I say A plus setup, so we are talking about A plus setup, meaning high quality setup. Okay, so if the setup doesn't, maybe there is one condition that doesn't confirm in your setup, that is not a A plus setup, and therefore you need to avoid taking that trade. Okay, so if you do that consistently with time, so let's say maybe probably you're giving yourself, I just created this for the purpose of training. Let's say maybe you're targeting about $1 million. So remember, that's quite a huge goal. So the key thing is to give yourself some milestone. So you began with $100. So the moment you achieve $500, that milestone number one, celebrate that milestone, go and treat yourself. Then start milestone number two from $500, maybe probably doing with the multiples of 5. So then from $500 to $2,500, that milestone number two achieved. Celebrate that, okay? Then go to milestone number three, $125. Milestone achieved, celebrate that. Milestone number four, okay, 625,000, 64,000, around $500. Milestone number four. So you have different milestones. So make sure you break your overall goal into small goals, which I'm calling milestone, and these will help you see that you're making progress. And the moment you're celebrating yourself, at least you're making you feel motivated, or you feel psyched up, okay? And therefore it means that you're gonna push until the end of the time. So if you look at it, if you're going to do that, you're talking about roughly 1 or 2 weeks. Of course, it can extend even to more than 1 or 2 weeks, because there are some days, not all days you'll be winning. There are some days that you'll be maybe probably taking losses. and therefore it might drag you a little bit. But basically, when you're talking about 1 or 2 weeks, that's about 2 years, because 1 year is 52 weeks. So that's about 2 years. Maybe probably give yourself 2 to 5 years, not bad, all right, depending on your level of expertise. For advanced traders, they can comfortably achieve this. But for beginners, or maybe probably intermediate traders, you find that it might take quite some time. So just accept the kind of trader you are, and give yourself a realistic time. Maybe 2 to 3 years is quite realistic, and you can be able to achieve that. Okay, so that's it. That's how you can be able to grow your counters. $100. I would wish you to challenge yourself in doing this. But probably if you need guidance in terms of that, I'll share the link to my trading group on my WhatsApp group, and you're able to join there, and we can be able to craft the way forward. So thank you so much, and see you in the next episode.